all token holders are like, great, that revenue, please give it to us to buybacks or something else. And it's like, guys, we're just getting started. Like, I need every single dollar of revenue in my company to continue this growth that I'm experiencing.
Yeah.
And crypto founders do not get that opportunity.
Right.
They would get it with venture tokens because everything is equity based.
Welcome to Soul Brothers Pod, the finest podcast on Solana with myself, Simon. And today I have an exciting guest, which is Treggs from Seedplex. And we're going to jump into some exciting topics, what they are cooking at Seedplex. Treggs, welcome to the show.
Yeah, so Seedplex itself, we like to think it's the definitive way to fundraise if you are a company, not only starting in crypto, but also just in Web2. What we have basically accomplished is allow the community to organize around a token. They will create a treasury. And then that treasury will purchase equity in the company itself. What this allows, the company is able to stay equity-based, which allows founders to just focus on making a good product, market share, they don't have to become economists. And then secondly, it also keeps everything very simple. If you want to get acquired and all these other things, people that are, the folks that are acquiring companies these days don't want to learn about a token model and all this other stuff.
Yeah.
They understand equity.
Right.
So you get the best of both worlds. You get the distribution of a token. You get to get the community involved from day one, which the community, here in crypto we love. And you get to stay true to the fundamentals of equity.
We do have to double click on a lot of things to fully understand what's happening here. Because I understand where the core problem comes from that Treggs is trying to solve with Seedplex, together with Dev, I think, is your co-founder.
Yeah. Spaceman Dev.
Spaceman Dev. You guys just went through the Solana incubator as well.
Yes.
Came out of it right now. I think it's over, right?
Yep.
And you are basically at a stage right now where you will have your first launches soon, I suppose.
Yeah. Coming in the middle of January.
Middle of January. The first tokens that actually launch, projects that actually launch on Seedplex.
Correct. They are tokens. They are tokens. We do call them venture tokens. They are basically a new primitive, right?
Yeah.
We're excited to bring to market.
Let's double click on a few things here. First of all, there's equity, right, in the company. Yeah. Is the company going to be in US, or does it matter where the company is? Like, how's the legal structure actually looking like for these venture launches?
Yeah. So it depends on like what's the most suitable for the founder. We're flexible.
So it doesn't have to be Delaware or something. Okay.
But if you're like a brand new founder, obviously there's pros and cons to incorporating different ways.
So you would recommend something. What would you recommend these days to founders to like if it's like a vanilla generic kind of founder guy, whatever he's from?
Honestly, if you're starting out small, just Delaware C-Corp, kind of like does the job.
Yeah.
The only concern is just like you then have to pay US taxes.
Right.
So that's you have to balance that out with how much revenue you expect to make.
Okay.
If you're expecting to make significantly more revenue, then you should incorporate somewhere else.
Maybe offshore,
BVI,
Dubai.
like Dubai, Singapore, like all these are very suitable options that have better tax treatment depending on the nature of your business.
Yeah. Now, I find it super exciting. So I have like a ton of questions. We don't have a lot of time. So we're going to try to squeeze the most out of this.
This is not the most exciting part. Deciding where to incorporate.
Wait a second. But for me as a founder, I think these details are very relevant. Yes. And I know for a fact there's lots of founders out there. They have no idea where the fuck to start, right?
Yes.
So having like legal structure, I start with my kind of development entity, I guess, but this entity is also going to be the entity that accrues all the value on the equity part. Now, for the token, do I need a separate entity? Because where I'm coming from, I need an offshore setup, I need BVI, I need Panama, foundation, and so on, right? Yeah. How does this look like for Seedplex?
We take care of all that. All you have to do as founder is give us a safe on the same terms as the rest of your round. You can raise through a venture token, and then you can also raise through traditional VCs.
Okay, and they would get equity.
And they would get
straight equity.
Everyone's signing safes here.
Yeah, okay.
So VCs are signing a safe.
You're signing safe.
Seedplex is going to be signing a safe with them.
Okay.
And that's it.
Okay, and then
so for a founder, it's like super, super simple.
It is actually.
We could probably get it set up in like under a week, to be honest.
And you kind of get in as a investor, kind of with your own SPV, I guess. Is it going to be a special purpose vehicle that's going to be created for that deal?
Correct.
Okay, and then that vehicle is going to buy shares through a safe in the target, which is the founding team, the founder.
Correct.
Right. And then what happens on the token side of things, and how are the tokens linked to that entity?
Sure. So first, that money has to be raised, right? Like you can't just get a safe for free.
Yes, it's not coming from you guys. You're not the investor.
Exactly.
You're the facilitator.
We don't front run the money. Maybe in the future.
Actually, might be a model against the fee or
when it's like very hot equity and that's far in the future. We can talk about that later. But initially, what will happen is like, okay, company is launching. The sort of venture token is then used to raise money in order to like get all this money into the entity that's being spun up for it. Once that money is raised, now it can actually execute the safe because they can deliver the money, and now that safe is being held by that entity. The venture token itself, all that it's doing and what the community is, buying is governance over that treasury. That treasury is holding equity. And so that's what allows it to be not necessarily equity backed or like a one-to-one swap, but it does mean that the only reason people are buying this token is because of that underlying equity. And the founder, all he has to do, and what token holders demand of him, is make that equity grow in value.
Okay. What is it? How does it work if I raise equity besides the token? Isn't that kind of diluting the token value potentially of that SPV? Like, isn't that something? Is there something that yet you wouldn't advise a founder to do who raises through Seedplex? Like, for example, signing a few safes next to Seedplex, right, with a few VCs and angels and so on. They all get equity, right? And then you have Seedplex coming in with a venture token, and these guys get tokens that invest through Seedplex. But
they get tokens, but the underlying, like the very key thing about Seedplex is that there is a path to redemption. There is a path on the back end, and this is where all like the KYC and compliance layer comes in.
Okay.
Initially, it's just as any other token, right? I can go just purchase it with USDC. I have my token. On the back end, when it's time to redeem the proceeds of that equity to do an acquisition or an IPO or something like this, or like a big tender offer, like someone just wants to buy a significant piece of equity in a company, that's when the compliance and KYC layer comes in. But merely the fact that there's a path to the proceeds or the equity itself, we are exploring the fact that you can actually bring venture tokens in the future, do the whole compliance layer, and then get equity it's yourself on your books. That's what gives it all the value.
Interesting, yeah. Okay. And where does the liquidity come from for the token that I launch?
Yeah, that's just in the beginning, you would just raise an extra 10%. So if it's like $1 million safe, you would raise a 1.1 million.
Okay.
100K is set aside for liquidity purposes. But it's important to note that this liquidity is part of the treasury. So it's not going anywhere.
It belongs to the company.
Not the company, it belongs to the venture DAO.
It belongs to the
community
treasury
that is organizing around this token.
Yep.
And so at the tail end, when it's time to redeem your tokens for a percentage of the equity, a percentage of the treasury, that liquidity is part of it.
Right.
And after you wind down and you redeem it, there's no need for liquidity anymore. Everyone has their dollars, everyone has their equity on their, either their card or whatever you're using. And so there's no more need for a liquidity pool. So it's a fee that, you have to pay up front a little bit just so that is tradable. Yeah. But all of it is still owned by the entity itself.
But obviously you don't want to pull out all the liquidity at any point.
No, that happens always at the end. Like when you one of the decisions. Wind it down.
Okay.
Disperse all the assets of the treasury.
Yeah.
That's when the liquidity is finally okay.
It kind of requires a little rethinking as someone that has, we're all used to tokens today.
Yeah.
But this is a bit of a different model because the token doesn't have a infinite lifetime value, does it? Like what happens to the token in the best case scenario? Actually, it dies. I mean, it gets redeemed.
It closes down. Like my idea for a life cycle of a company is like, hey, you've just incorporated, you start your project, and you build out what you want to build out, and you achieve a lot of success. You raise your Series A, your B, your C, your D, and now you're at a point where there is significant demand on like secondary private markets that are trading equity itself. We're looking to IPO or there's an acquisition. Like those are the exits for these equity-based companies, and they happen down the line.
Yeah.
The venture tokens and the venture DAO that's being created around the company's equity, all those guys get those proceeds as well.
They have an exit.
And so this is the exit, right? Like it's a good thing if the venture DAO is closing because it usually means there's a favorable liquidity event.
Because otherwise, in our current world, how do you exit a token? You just dump it.
You just sell. You just never think about the product again.
Yeah.
Yeah. And that's a problem for founders, right? Like you yourself, like we have a bunch of friends that, hey, we're doing good work day in, day out. We're making like good product, but there's just no real path of like this token being a viable thing to have past like that first 3 or 4 years.
Yeah. Yeah. That's very interesting. And another thing that I find personally very interesting is also the fact of having the option to keep raising funds to an extent as well with such a setup, because right now you launch a token and it's it's kind of over, right? And I heard Kash talk about it somewhere, I think in a talk that he did, about how crypto companies with live tokens they should have rounds that they can do. We can't do rounds anymore, like a pre-seed, seed, Series A, Series B, because once you launch the token, you basically IPO'd, right?
Yeah.
So in the old world, it would mean you already did your seed, pre-seed, and your A, B, C, and then IPO, right? We IPO in pre-seed stage, right? Technically, but even earlier sometimes. And then how do I raise my Series A, right?
Yeah, I mean, two things on this.
Yeah.
Like one, we IPO at a pre-seed stage, which is, a little bit backwards.
Mm-hmm.
Secondly, then all those token holders, you grow the company, you're now like a seed stage, maybe Series A. All token holders are like, great, that revenue, please give it to us to buybacks or something else. And it's like, guys, we're just getting started. Like, I need every single dollar of revenue in my company to continue this growth that I'm experiencing.
Yeah.
And crypto founders do not get that opportunity.
Right.
They would get it with venture tokens because everything is equity based. And then number two, that successive raisings, like this is how dominant companies are built. It also encourages founders not to raise like the most money they possibly can, because that you see that in crypto, right? Like brand new project comes in, raises like $10 million, and it's like a 3-person team. Like, what is this team going to do with $10 million? Like, they're not even used to handling this level of capital, let alone allocating it appropriately and efficiently. On the equity side, when we see equity raises, people raise as much as they need to get to the next stage. They can raise again. Just over time, this is how dominant companies are built. Uber, Airbnb, they raise 8-9 times before they reach that like $50 billion scale.
Of course, because you can, like, you want to keep your valuation as low as possible or as high as possible to raise as little as possible.
Yeah.
So you don't need to give away so much, right?
Exactly.
With a token, it's a bit difficult. One more time, you kind of said it between your lines, but I think to make it more clear, how are we solving? It's like a very fundamental question for your setup. How are we solving the rev share, buyback, value accrual thing? In this new world of venture tokens compared to the old world of ref coins and all the shit we're doing right now. Like, I know the answer, but for people that didn't really get it yet, how do we solve for value accrual here? So how can we have both, right? Live tokens, liquid tokens, crypto tokens, the world we want to live in, and fair value kind of alignment?
Yeah, like, how does the token track fundamental value that's being created here by the company?
Yeah, that is the magic we need to figure out, right?
And that's like what we have here.
Yeah.
You as a founder, all you have to focus on is just growing the value of your equity, and your token holders are going to be happy. Equity value grows when the fundamentals are strong, when your company is growing bigger, when you're acquiring users.
Yeah.
And that's all you have to focus on. The token, no need to become an economist, no need to, incorporate into your product whatsoever. You can still use it as incentives.
Yeah, it doesn't have to. It is.
You don't have to.
It is tokenized equity.
We don't.
You can't call it that, I guess,
it's not necessarily. A cool way of viewing it is more of it's a syndicate that's being created, and the token is merely an organizational tool, and it's a liquid tool.
Cool.
So people can kind of join in the community
at any time.
At any time, like, hey, you know what? I'm kind of done with this. You can sell the token in the open market.
Yeah.
But it's just an organizational tool that governs that treasury that is holding equity.
So one thing I don't fully understand still is, it's still a liquid token. It's still trading live, right? I can buy it on Jupiter, I guess.
Yeah.
It's there, right, on exchanges. We could technically put it on Flash Trade, make a leverage pool out of it, right? We could do all these things,
yes,
right? With these kind of venture tokens, even, I guess. So what happens if we, if the brand awareness goes through the roof for some reason? You know how crypto goes. Like,
of course,
some announcement goes out, something goes viral, and the token really blows off, right? And we did our safe round at 10 million FTV or something, and then we're kind of tinkering in the back, and the value of the company accrues. Like, we raise another round at 15 mil maybe, but then we have this kind of virality moment, and the token pumps to 100 mil.
Yeah.
Right? 100 mil FTV. Do we have like a detach right now from the equity value of the company and the token value? There's something I'd like to unpack. Like, what happened here?
So what happens there, as a founder, you have a couple options. It's a good thing, right? Like, the market is valuing you quite highly.
Yes.
As a founder, what you can then do is you can say, hey, you guys that have clearly very much like my equity, right? Because you've priced this thing very highly. You can go back to that community and it's like, all right, you think I'm worth 100? I'm happy to sell you more equity at 80 or 70. And like, a rational market will say, yeah,
with a discount,
sounds good.
Yeah.
And so the amount of the supply increases, the venture token increases, more dollars are raised at that valuation to give to you, the founder, and you sort of are able to take advantage of this in a much better way. And you do so only if the community decides that you're that it's okay to do it. Like a key thing that we wanted to have with venture tokens is the community is placed first. All too often, you know, communities like talked about in crypto and like how it matters so much.
Yeah.
But in reality, like you look at the kind of deal that they're offered at TGEs, and it's great. Buy this token. By the way, all the VCs are going to unlock at like an increase the effective supply of this like at 100% for the next 3 years. Good luck. Here, the community is very much in charge as to like what equity gets brought on chain, what equity goes through this process and is kind of brought on chain.
Yeah.
And that's very powerful.
Okay.
But let's say even the community says, you know what, we're actually not interested in like raising more money from us. Like we're not going to be cool with that. That's okay too. You as a founder can go now to the private market and say, hey, look, the market's literally valuing me at this. Would you be willing to do a private round at like a little bit underneath this, or even at that, or at even at that value?
But the token is so liquid, it might also go down. And
it might also go down.
Days again.
But you have a price point, right? That you can kind of look to. And then, of course, I do want to mention the other side where what if the venture token trades down, right? Like it just keeps going down and, you know, the community's not excited. I don't know. Some markets are going to market, you know? Then you as a founder are like, great, I sold equity at like $1 million and now I can effectively buy it back at much lower than that. And so you've just made money, right?
Yeah.
If you sell something at $1 million and then you buy it back for $500K, that's a good deal.
I guess so. But at the end, I do need a buyer that's not me at some point.
Yeah, of course.
Yeah, so
but that's where the fundamental value comes
you need
through, right?
Yeah.
It's like,
obviously, you can't just build shit and expect things to work out. Like, you know, like it does check out. But it's, I think the biggest struggle that we're going to have with this product is probably the understanding of everyone.
Yeah.
Because it's a new primitive, as I said. We have to think a little bit around the corner here as crypto natives. And I think the best way to understand what you're actually doing with Seedplex is by touching it and seeing how it works. So that brings us to next steps and timelines. I think you mentioned earlier, mid-January, we can expect the first launches.
Correct, yeah.
Technically. So do you already know who's going to launch? Like in your head, obviously, you can't say it probably, but...
We'll be announcing them at my speech, Breakpoint.
Oh, okay. Hell yeah. When's that? Tomorrow, Friday? Or
Saturday.
Saturday. Cool.
So that's very exciting.
Okay.
And like...
Okay. Mid-January is going to...
I would agree with you. The best way of learning it is through touching it, interacting with it.
Yeah.
See, you know... We focus a lot on the education.
Yeah.
Not only on how our stuff works, but also like on the companies you're evaluating. You're going to have, how do I value the fundamentals of this company?
Cool.
How do I kind of become
a VC?
At least for the purposes of this deal.
Yeah.
Which, to be frank, you know, when you look at VCs and you like look at their opinions, that's all they're doing, and oftentimes they're not arriving at better opinions than like
they're wrong a lot of. They're wrong more than 50%, like much more.
I mean, hey, like VCs are useful. We love like good capital allocators, especially the ones that like work for you.
Yeah.
But I think in crypto we have a lot of folks that are merely trying to do the right thing. So like they don't want to take the risk and say like, hey, I had this idea that this could be like a frontier technology, never tested, and I invested money in it.
Yeah.
This is not really a good bet for them to make because they're not actually that interested in the bet going well.
Right.
They just want their management fees from being able to make the safe bets. It's like, well, prediction markets were massive. So naturally, I invested in prediction markets. You can't fault me for that. And so there we go.
Yeah.
And so you see this a lot, right? And I imagine you face this with your product itself, where it's like, it's very innovative. But it's not necessarily the hot topic.
Yeah, 100%.
And everyone and all the VCs are like, well,
for sure,
we like this hot topic.
Exactly.
Are you doing anything with that? It's like, well, no, I'm doing something else different. It's, oftentimes your community is going to be the ones that understand it the most.
Yep.
And if they even get that a little bit of education of how do I value this on a fundamental level, you know, prospective cash flows, like revenue models, all those fun stuff. Now all of a sudden they can make informed decisions, and they know, okay, I am getting something of value, and I'm willing to put my dollars behind this.
Yeah. When are we going to be able to put our dollars behind something? Like, are we going to have like some public sale opening?
Middle of January.
That's when it kind of opens up. So
opens up.
Can I be on some wait list, or can I be on some?
You will see a lot of activation.
Yeah, leading up to it.
Probably like in between the Christmas and New Year's break, we'll like start making quite a bit of noise. We'll be going on, you know, things like this and being like, hey, this is the company. Here's what it's doing. Here's why we're excited about it.
Yep.
Here's like the community around it. If they have any questions, we're going to be answering them. So a lot of that activation you'll see leading up to it. Crypto has a very short attention span. If we start pitching it now, people will forget about it in a month.
Sure.
So
yeah,
2 weeks, that's when we make about as much noise as possible.
Okay, sounds good. So people shall look out for Seedplex.io. Is that the handle on Twitter? Seedplex
Yep.
_
Seedplex_IO. You can start reading about it right now.
Yeah.
Seedplex.io, our website also has kind of like how it's going to work. So you can get a little bit of knowledge.
Yeah.
But then obviously the best way of learning is you learn by doing. That's how I learned a lot of crypto. I just went in there. One of I always love the story. It's like my first excitement about DeFi was me taking a loan on Aave.
Yeah.
And it cost me like $150 of ETH and gas.
Yeah.
But it was still so exciting.
Yeah.
I was like, what do you mean I could get I would have to go to a bank. I would have
just
to
the premise,
like
the concept
I just click some buttons and I'd be able to access liquidity.
Yeah.
Was massive.
Yeah.
I learned the rest of DeFi that way as well.
100%.
Seedplex, venture tokens, new primitive. You're gonna have a little bit of learning curve. We're keeping it pretty simple.
Yeah.
We're very excited for like future developments that we have because we already have cool designs for a lot of the pain points of this process.
Cool.
Including privacy through Archeum.
Yep.
Which love those guys. My co-founder Dev literally has purple colored hair right now because of Archeum.
That's crazy. Yeah.
So
That's cool.
Establish the primitive. But then like once you establish this, I think the future looks very, very bright from what you can build on top.
Awesome. That's a perfect way to wrap it up, guys. So the future is looking bright. If you want to learn more about Seedplex, Seedplex_IO or Seedplex.io to kind of get the all the insights about the product and probably also stay up to date on the launches that are going to come in mid-January.
Yes.
So until then, thanks for tuning in to Saul Brothers. Make sure to subscribe to the channel at Saul Brothers Pod on YouTube. And Treggs, thank you so much for coming on.
No, thanks for having me. And we'll definitely keep talking.